Hey everybody, hope everyone's doing well and had a good day. This is going to be a brief recap of the Emini 5-minute chart for Monday, March 24th, 2025. So going into the day, there was a big gap up, and if we look at the Globex 15-minute chart, we'll see a bull channel leading into the day. When there's a big gap, I like to see the Globex session. And here it is. So here's last Friday, we gapped up and we basically had a second channel bull trend. And so for that reason, going into the day, there's a little bit more of an expectation for higher prices. There's a stat that I got from Ali, and I hope I'm remembering it correctly. I'm pretty sure when there's a big gap up, there's a tradable move in the direction of the gap within the first hour. So I have that in the back of my mind, thinking we're probably going to get a decent rally sometime within the first hour today based on the Globex. So big gap up going into the day. Trading range bar on bar 1, but then a breakout and follow through bars 2 and 3. Strong enough rally, we're probably going to get a second leg up. Think about if you're looking to sell against bars 1 through 6. It's a bull micro channel. And the bears probably need a second entry. They need a trend line break, a retest of the trend's extreme, and then maybe a major reversal. Are bars 7 and 8 enough for a major reversal? Probably not. If you think about how much damage bars 7 and 8 did to 1 through 6, it's really not much, maybe a 25-30% pullback. So to me, this looks like a minor reversal, second leg up, likely. Then we got 9 through 11, another micro channel for the bulls. And it's pretty decent. There's not much overlap with the bars. 9 overlaps 8, but 8 was a bad stop order signal bar. We have a micro gap between the high of bar 8 and the low of bar 10, and we got follow through buying to a new high. So we're in the direction of the overall trend. We have a 3-bar micro channel, strong enough breakout for a second leg. So again, the bears probably need a second reversal. They need a strong trend line break, then a retest of the trend's extreme, and then maybe a major reversal. Even with major trend reversal setups, 60% of them transition into trading ranges. Really only about 40% of major trend reversals become major reversals. And we got 12, 13, 14. Look at the bars. 12, it's a doji bar. 13, another doji bar. The market's trying to go down, it gets bought. Goes down, gets bought. 14 is a third attempt down, testing a breakout point. The odds are there's buyers at the high of bar 8 because of the breakout. Traders who got trapped here looking to buy. Bears sold above bar 8, trapped into a losing position. They're looking to buy back shorts around the same entry price, or if they sold here, scaled in higher, maybe they make a profit on their scale in entry. Bulls who did not take the buy because the signal bar was weak, maybe they thought bar 8 would get a second leg down. They're looking for a second reversal to enter long, and they don't get it. So bulls are trapped out. They're also looking to buy. They're looking for temporary support. The bar 8 high makes sense. So you have bulls also looking to buy here. Bulls and bears both looking to buy. There's demand. The buyers. There's competition with, between the buyers. Traders are looking to get long. So the downside is limited. The reversal is minor, and we get trend resumption. 15, 16, 17, another 3-bar micro channel for the bulls. The problem with this one, you know what I'm going to say, it's a late leg, 6, 12, 17. But with late legs in trends, let me back up. If we can imagine this breakout, or this overall channel, all the way from bar 1 to bar 17, is this a tight bull channel or a broad bull channel? You know it's a tight bull channel. You know the downside is very limited. If we were to draw the trend line, you can see the trend line and the channel line are very close together. It only takes about 3 or 4 bars for the market to test one side to the other. That's a tight channel. What is a tight channel on a higher time frame chart? It's a breakout. We know if we looked at a 15-minute chart or a 30-minute chart, the rally from bar 1 to bar 17 would simply be a bull breakout. So even though it's 3 legs up, should you be looking to sell? No, probably not. You can expect a deeper correction, maybe 10 bars and 2 legs, but when the channel is tight, the expectation is a minor reversal. So as far as buying or selling bar 17, for me, I think it's a better signal to wait. If you're going to buy, probably look to buy a deeper pullback. And as far as selling against a tight bull channel, I would not. We got a pullback and then a 4th leg up to bar 20. Now it's an even later leg. The market is failing to break out of the channel line. You can see I have this drawn from the high of bar 6 to, I don't know, we're touching several resistance areas, maybe the 11 high, the 16 high. And you can see the market is testing this imaginary line repeatedly, and every time it tests it, it goes lower. Bar 20 broke above it, but could not close above it. That's a breakout attempt by the bulls, but they could not close above. And then 21, the bulls did not get follow through. 22, another attempt, but could not close above. 23, another failed attempt at follow through for the bulls. At this point, we have 4 legs up, a micro double top, up on 20, down on 21, up on 22, down on 23. 23, reasonable place to exit longs. If you're long, you can maybe put a stop order below 23. Bears, maybe they sell. Now it's a 4th leg, micro double top. You might expect a minor reversal, maybe a test of the low of the most recent leg up. That would be the bar 19 low. But in general, tight bull channel, only want to look to buy, so maybe just exit longs. Still probably always in long, but we might be in correction mode. And you can always buy again above a bull bar, closing near its high, 27. So what happened here? 24, bear breakout attempt, it got bought. 25, breakout attempt, got bought. 26 was a 3rd attempt to the downside, still holding above support, the bar 19 low, and then we got a bull bar closing on its high, 27. Tried again to reverse back down, 28, but micro double bottom, down on 26, up on 27, tried to go down 28, and then up 29. Bar 29, a strong bull trend bar, probably buyers below, 2nd leg up likely. 30, we got follow through buying. It's a bad sell signal bar. Let me see if I can blow it up a little bit. There's hoping this was enough of a trend line break. So we have a bull trend line break, retest of the highs, and then a major reversal. But are you really eager to sell below bar 30 after seeing 29? In the overall context, every bar today has been completely above the moving average. stop order bears having a hard time making money. In other words, it's easier to make money buying than selling. It's always at long. So 30, not a very good stop order signal bar for the bears. We trigger stops below bar 30 and go outside up. Bulls looking for their second leg up. The upside might be limited because it is a bull channel. How do markets behave, or how do traders behave when the market is in a channel? In a bull channel, traders buy sell-offs. They take profits at new highs. Sell off down to 8, they buy it. Rally to a new high, they take profits. Sell off down to 14, traders buy it. Rally to a new high, they take profits. Sell off 19, rally, take profits. Sell off down to 26, they buy it. We rally, test the highs, try to break out, but don't get very far, just like these other attempts, and traders take profits. What else do we know about market behavior as far as the market cycle is concerned? Is it more likely that a bull channel breaks out to the upside and we get an even stronger bull trend? Or is it more likely we get the bear breakout? Well, what does Al say? Al says, bull channel, bear flag. You're expecting the bear breakout. Most of the time, the market breaks to the downside. You get a bear breakout of a bull channel. So you can think of all bull channels as bear flags. And channels tend to evolve into trading ranges. So less likely we get the bull breakout above the channel and break into an even stronger trend. 34, that's a bar that always in traders probably will respect. We have 3 or 4 legs up in a channel. We just got 2 legs up here, 30, pull back, 32, but failing to break out, bad follow through, and then a bear bar closing near its low. Probably will get at least 10 bars and 2 legs sideways to down and maybe test 27 low, 19 low. And because this is a bull channel and you expect channels to evolve into trading ranges, we could test all the way back down to the bar 8 low. This was the first pullback in the channel. Spike, pullback, channel, and then the channel evolves into a trading range and often tests the start of the channel, which also often becomes the bottom of a trading range. $34, disappointing enough that traders who were long here, say they bought the close 32 or 33, trapped on 34, they use 35 to exit longs at break even. Bears, they sell, they see 35 as a breakout pullback, a great price to sell, and then a give up bar, 36. 36 is an interesting bar for me because there's a part of me that wants to reset the leg count with bar 36. But there's other reasons to not reset the leg count. Maybe 34 is leg 1, pull back, leg 2, 36. Maybe the sell-off down to 27 is leg 1, deep pullback, greater than 100%. And then we retest the low, 36 is leg 2. By default, I basically always want to call double bottoms leg 2 because it's the second time price is retesting this area. But 36 was enough of a surprise that it may have reset the leg count. So that's something for me to work on. In this case, we got a brief second leg, so pullback 38, second leg 39. But is 38, 39 enough of a second leg for 36? It's not a very symmetrical second leg. I thought the sell-off down to 45 with more symmetrical second leg, 1, pull back, 2, but the channel down to 45 was strong enough for its own second leg, so the micro channel got a trend line break, but before there's a major reversal, you're likely to test the trend's extreme. 55, sell vacuum, test of support. We're also coming close to, let's see, the close of bar 8. And that's where 55 tested the close of bar 8. So 55, good looking bear bar, but late leg and testing support. So the downside might be limited. The bears still got a spike in channel. It's just minor, but they still got 3 or 4 legs down to 61 before getting the surprise bar 62, bull breakout, and follow through 63. This probably resets the leg count, the market cycle. This is a new leg 1 breakout, so traders will be aggressive, buying the pullback even if it's deep. In this case, it looks like it was deeper than 50%, but we're testing the breakout point. You can call it the 56 high. So 62 broke above the past 5 or 6 bars. 63 retested the breakout point, rallied. 64 retested the breakout point again and rallied. So leg 1 reset, second leg up likely. If this is a trading range, which it looks like it is, we may have to test all the way back up to the highs again. And with the gap up and the rally on the open in the first couple of hours, this simply, this bear channel, a few legs down in a trading range, may have been a bull flag. So the bulls get the breakout of the bear channel, pullback, and then resumption. 64 through 68, strong enough rally. It's a micro channel, probably buyers below, second leg up. We can see buyers below, second leg up, finding resistance here, but the high of the day is so close we may have to test there. This channel is so tight, the first reversal attempt will probably be bought. So the first reversal will probably be minor. And you can see not much of a trend line break there before we got 76. But 76, good looking bull bar, bulls still need follow through. And then 77, follow through, but lots of overlap. The market rallied, pulled back all the way to the open of 76, and then rallied a second time. Also, what leg is this? Maybe 63, leg 1, 68, leg 2. And here, leg 3. Trying to break out above the top of the trading range. What's Al's 80% rule? 80% of breakouts fail. So even if this looks like a strong breakout, odds are it's going to fail. And then it failed in a big way. 78 got vacuumed back down into the range. 78, strong enough bear breakout, top of a trading range. Second leg down, likely, but so late in the day, we may not get it during the RTH session. And you can see we pulled back, tested the high of the day once again. I suspect that looks like about a 50% pullback. Probably sellers in this area for at least a brief second leg down. But this channel up was tight. First reversal was likely to be minor. All right, that's it for today's recap. I appreciate everybody for watching, and I hope everyone has a good night.